Hello everyone, this is Manjula Devi P, working as Assistant Professor in GFGC Kanakpura. In this session, we are discussing about inventories as explained in Ind AS 2. So, you would have heard the term inventories earlier because when we prepare the final accounts and also in our statement of profit and loss, we take this item as inventory, we take changes in inventory and also we take inventories as current assets. So, what is the technical meaning of inventories? Earlier we used to call it as stock, okay, closing stock, opening stock. Now the terminology has changed and we use the standard term inventories. So, what is the meaning of it and how do we value it is being explained in Ind AS 2. So, in this session, I will be using the terms, of course, inventories, then net realizable value, fair value, and I have been using Ind AS 2 in my talk. So, what is the meaning of all these? Let us see. First and foremost, inventories. What does inventory mean? As per Ind AS 2, inventories mean the assets held for sale in ordinary course of business. Then in the process of production for such sale, or inventories could be the asset in the form of materials or supplies to be consumed in the production process or in the rendering of the services. That means inventories are the assets which are kept for selling in the business, selling in the ordinary course of business, or any item which is in the process of production for such sale, or it includes any material or supplies which is used for such production process or for rendering any such service. So, basically it covers three things as inventory. The first one, which is held for sales, means they are talking about the finished goods. Then which is in the process of production, they are talking about work in progress or semi-finished goods, or the materials, they are talking about the raw materials. So, the idea is how do they value it? Okay, what is the basis of valuation that should be taken care when they are valuing the inventories? Because inventories are such things where the actual value of it, or say the book value of it, has to be determined. Like if you are buying a machinery and you are paying say 1 lakh and you show that machinery at 1 lakh if there are no other incidental charges. But now this inventory, say you have bought it for 10 rupees, you have paid some transportation expense, and now if you see in the market value it can be sold only for 12 rupees. Earlier such stock you have sold for say 15 rupees, or now if you want to buy such similar stock, say you have to pay 11 rupees. That means there are so many values which could be attached, like the cost you have spent, or the sales price that you have already, like the selling price that you usually sell it at, or the value at which you can sell it if you want to sell it now, or the value of replacing the stock. So, there are so many values which comes into picture. Now, which is the value that I should consider while recording it in the books of accounts? That is the big question here. So, in order to solve that confusion, or in order to give a clear cut measure for recording or measuring the inventory, so they say inventories shall be measured at the lower of cost and net realizable value. So, here I am using two technical terms, one is cost and the other one is net realizable value. So, let us see each term. What is the meaning of cost? Cost of the inventory includes the purchase price, of course, plus any cost of conversion, plus any other cost incurred in bringing the inventories into the present location and condition. That means whatever the amount you have spent while buying it, or any amount you have spent while converting it, suppose in case of semi-finished goods or work in progress, any other expenses you have incurred in bringing the stock, like you would have paid freight, you might have paid custom duty, you might have paid transportation charges. So, all those things are basically considered as the part of the cost. Then what is net realizable value, NRV in short form we call it as. Net realizable value means the selling price minus the estimated cost of completion. From that again minus if there is any estimated cost incurred in order to make the sale. That means the selling price at which I can sell it in the immediate future, we also call it as fair value. Okay. Suppose that stock can be sold at 20 rupees, and in order to sell it, if I have to incur 2 rupees for some expenditure. So, basically I am getting 20 minus 2, 18 as the net realizable value. Okay, that is called as the net realizable value. Now, I have two components with me. One is the cost, one is the net realizable value. Say for that particular item, I have incurred cost, putting all this together, say 12 rupees, and if I can sell it, the net realizable value is say 11 rupees. Now, which one should be considered? As per Ind AS 2, I should take the lowest of it, lower of it, either cost or net realizable value, whichever is lower. Now, in this case, say cost was 12 and net realizable value was 11, then I should recognize the inventory at net realizable value because that is lower. Or on the other hand, if the cost is 10 and net realizable value is 12 for example. So, which is lower? Cost is lower. So, I should record the inventory at cost because that is lower. So, I should recognize or measure the inventory at the cost or net realizable value, whichever is lower. Let us take one example. Okay. So, Chandana Limited is valuing its inventory as per Ind AS 2. The following information is furnished below. The inventory was brought at 20,000 and the transportation cost of 500 was incurred. The inventory is outdated, now it can be sold only for 15,000 and an expenditure of 1,000 to be incurred to make it saleable. Now, what is the value of the inventory? That should be shown in the balance sheet. First, let us calculate both the components, that is the component of cost and the net realizable value separately. So, what does cost include? The purchase price plus if there is any incidental expenditure like transportation or any expenditure. So, cost was 20,000 plus 500 I have paid for transportation. So, basically the cost of the asset, the inventory comes to 20,500. Then let us calculate the net realizable value. That means the price at which I can sell it right now if I want to. So, I can get only 15,000, okay, and I have to incur an expenditure of 1,000 to make it saleable, okay. So, then the net realizable value comes to 16,000. Now, in this case, which is lower? Net realizable value is lower. So, that has to be considered as the value of the inventory. So, in this case, in this session, we discussed about meaning of inventories, what are the things that comes under inventories, raw materials, semi-finished goods and finished goods, and what should be the basis of the valuation. It should be valued at the lower of cost or net realizable value. Anyway, in the syllabus in the Bangalore University 5th semester syllabus for IFRS, there is no numericals asked on it. So, only theory part is included in your syllabus. So, you need to know in detail about the meaning, the components and the basis of the valuation of inventory. Thank you very much. Hope you have understood the concept. Thank you very much.